We have an email query from Rahul now. Rahul was approached by a builder to construct an apartment complex on land that belonged to him. Now, Rahul wants to know if it is true that he needs to pay advance tax on the possible future capital gains as soon as the agreement is signed. Now, this is something that I want to spend some time discussing. If you get into this kind of a joint venture agreement, apart from capital gains, what are the tax liabilities that you could actually end up having to pay?
So, in a joint venture, apart from the capital gain that you are going to be making, the future income that you are going to make. So, in a joint venture with the development of property with a builder, you would normally have a number of flats that you are going to have in the building. Now, each flat would have some value to you, and then once you start making the sale of those flats, each flat is going to give you an income. That income now becomes subject to tax. However, the difference between selling a flat and then buying another one wherein you have a capital gain from a joint venture is that in a joint venture, you are making business income, and therefore everything that you are earning is subject to a 30% tax as opposed to a capital gain which could be 10 or 20%.
Right. So, also like you said, the income tax is one thing that you need to take care of, and the capital gains. Now, in case now I'm changing it a little bit. Say the situation is a little different here. You have a housing society, and there are a lot of housing societies in Mumbai currently, which are single building societies on a huge plot of land, which are now going in for redevelopment because they become very old. In such cases, the society owns the land, society owns the building, and of course, say they obviously would have an interest in the free sale component that the developer would be making for them, and say they get into a joint venture agreement of this kind. What is the liability to the society?
So, typically in a society system, how it works is that there are shares that the society normally issues to the owner of the property, and those shares are then transferred to the builder, basis which he then starts constructing the property. Now, the ownership to the society is only of the dues and any other payments that are remaining. Apart from that, the society should not be charging anything to the owner typically.
Okay. So that's how the tax liabilities pan out in terms of the housing society.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.